AMC cost to borrow rates are now almost at 1,000% again. The other data continues to improve within AMC as well. So we're going to take a look at the data on the day, the option activity, the option flows. We're going to look at all of the things that we typically look at. We are going to take a look at the technicals as well, because we are getting new information from the inflation report, and this can help guide us to potentially where AMC stock is going to go in the near future. So guys, let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section, and most importantly, happy Valentine's Day. So the markets right now down about 0.5% across the board. Just 10-15 minutes ago, the markets were up 0.5%. So you have seen quite a big flip in overall market sentiment around this CPI report. And that's going to be the most pressing thing on the day that can really move AMC, can move the markets over the next coming days. So that's what we'll start with. So inflation rose 0.5% in January, more than expected, and up 6.4% from a year ago. Now, quote, super core services inflation, which is key for the Fed and excludes food and energy and shelter, rose 0.2% for the month and was 4% higher than a year ago. So that is not good. That's probably the thing, if you want to pull anything out, that is not good. Some people are saying, well, it could have been worse than this, but pretty much across the board, month over month, year over year numbers all missed. Like it was pretty bad across the board, and the markets went down initially, but then did subsequently go higher. So if we take a look at all of the numbers, like I said, super core, that's going to be the most important thing. For the headline inflation rate, you were expecting 6.3%. It came out at 6.4%. Core inflation year over year, you were expecting 5.4%. It came out at 5.6%. Core inflation rate month over month, you were expecting 0.3%. It came out at 0.4%. The headline inflation rate month over month, you were expecting a 0.4% increase. It came out at 0.5%. So literally across the board, we missed on inflation. It was higher than expectations on all metrics that you evaluate it, right? Core, headline, year over year, and month over month. Everything was worse than expectations. But some people are saying, well, it could have been even worse than our expectations, right? So even though it was worse, it could have been even more worse. And that's why the markets are not down 2 to 3% at the time of recording this video. And that's important to point out, because today you're seeing a relatively muted response compared to some CPI days that we have seen throughout 2022. After all, CPI has given us our largest down days and our biggest up days in 2022. This has the effect of multiple days. So this is not going to be a one day it's over with. No, this is something people are going to talk about for at least the next week or two. At least the next week or two. And you are going to get more economic data coming out over the next couple of days as well. Now, I think even besides that, Fed commentary is going to be massively important, because yeah, we missed on these numbers. Inflation is going back up again. At least that's what it looks like. But it doesn't matter in the market's eyes if the Fed doesn't change their verbiage, right? If the Fed comes out and they start talking more aggressive and more hawkish again, we had Fed Bullard just a couple months ago saying 6 to 7% federal funds rates. Come on, that's why you were seeing just this overall negative sentiment and the market selling off so much. If the Fed comes out and starts to say similar things that they have said over the last couple of months, that will continue to fuel downside. If the Fed comes out and they sound more, okay about it than not, well, that doesn't necessarily mean that you have to continue to drop. Now, today at 11 o'clock in the morning, so starting right about now, Fed Logan will be speaking, and then you have Fed Harker at 11:30 a.m., Fed Williams at 2:05 p.m. and that's going to do it for tomorrow. You are going to get retail sales month over month for January. This will be very important because last month's reading was negative 1.1%. This month's reading is for a positive 1.2%. So essentially what you're setting up for is higher than expected inflation numbers like we've seen today, and potentially people spending a lot of money still. In the eyes of the markets, you want to see retail sales come in negative tomorrow. I doubt it will. If it does, that's a good thing. If it comes in hotter than 1.2%, it's going to be a very negative thing. And I think that could actually give you a bigger drop tomorrow based off of that than what you're seeing today, just because inflation and retail sales, you know, can equal foreshadowing inflation increases to come when people are spending money, like the retail data does show you. So there is all of that information. Now, if we take a look at AMC and take a look at the numbers of what we are seeing on the day, go ahead and refresh this so you have the most up-to-date numbers. Cost to borrow max is 955%. 955%, up from 564.5% yesterday. Cost to borrow average of 548.64%, up from 260% yesterday. Cost to borrow minimum up from 1% yesterday to 359%. AMC is still on the threshold securities list with a live short interest of free float at 23.2%, 119.5 million shares that are currently sold short. Interactive Brokers has you at 167% cost to borrow rates, even though we have not gotten updates from this, I mean, since February 12th. So I don't exactly know why this is not updating, but I would imagine these cost to borrow rates would be a lot higher now over on Interactive Brokers. So cost to borrow rates spiking like they are tends to lead to a rally. Now, with CPI and retail sales and Fed speakers and continuing data throughout this week, it's going to make it a little trickier to read. But as these cost to borrow rates ramp up into earnings, so should the actual share price of AMC. That tends to be the typical correlation that we see. Now, on a technical basis, if you take a look at AMC, you're sitting right at that 450 level, literally right on the level that I've been talking about in multiple videos now. This is a level that you really want to hold up to remain semi-neutral to even regaining a bullish stance, because this is the first major support level that we have been at besides $5 that may or may not hold up. So we didn't hold 5, right? You want to hold 450. If you don't hold 450, you want to hold $4. But if you don't hold 450, it could take you pretty quickly to $4 per share. So that is the real concern that I do see if the markets do continue to fall. Not going to be a good thing. AMC is down about 3.74% on the day. You have seen 1, 2, 3, 4, 5, 6 red candles in a row, and typically when you do see that, fun fact, you will get a very aggressive bounce. The RSI is at 39.5, so that is down here. That is at the lower end range. Still not severely oversold, but it is getting to that point, guys. So that is going to do it for this mid-morning intraday update, whatever you guys want to call it. That is the information that you need to know for right now. A lot is going to change by the end of the day, so stay tuned for that one. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. In the meantime, you guys enjoy your day, and I will see you in the next one.